When you need a mortgage, don't stress at all. Just tune right in and give these guys.
Good morning, YouTube. Today is Tuesday, January 6th, 2026. Holy crap, what's going on, fellas? What's up, fellas?
What's happening? Good morning. Good New Year. Or Happy New Year, sorry.
Can't believe it. Can't believe it, but I am excited. We are starting the new year hot. Boys, we got stuff straight off the press. And if you like three-letter acronyms, if you're an acronym guy or gal, we got you covered in 2026 because we got new programs, new acronyms, new everything you got to learn. But it's going to be great for your buyers because we got new mortgage programs that are going to open up your buyer pool and let you close more loans in 2026.
Yeah, I'm excited to be able to offer these products. People have been asking about them for a few years now. They've been in the space. It's a growing product. I know there are people out there in some of these offices and realtors and investors out there using them now. So we're here. We're going to bring them to you guys through West Penn's structure and be able to offer those so you don't have to go to an outside lender to get them.
Exactly. The last thing we want to tell any realtor partner or a buyer is, I'm sorry, we can't complete financing for you. We want to be able to finance every buyer that we can and get them into a home and help families get that American dream. So the first new, I don't know if it's an acronym or something you're going to need to hear in 2026 if you're a real estate agent, is non-QM. You probably never heard that ever in your life before, non-QM. So after the housing crisis in 2008, we had all these different rules where really the rules came in where a mortgage had to be QM. It had to be a qualified mortgage. And we're not going to get into what that really means. On the back end, the lenders needed to make sure it's a qualified mortgage. Well, now, and some of these new unique programs called non-QM are coming back to the market. And some of these programs we saw pre-2008 are coming back in.
Yeah, I mean, I think it's a great thing. I mean, a lot of those programs and the programs today, they're for specific people. They're not for everybody. And I think that was a portion of the problem, from 2008 is some of these programs were sold to everybody. And that's not how it was built, and that's not how it should be. They're built for specific clients, specific criteria, so that they can buy homes, because otherwise, based on tax returns and things like that, they may not be able to. So I'm glad to see some of these programs come out because it really does help homeowners be able to make homeownership affordable and buy a home.
And in our Pittsburgh area, we have a ton of self-employed folks. We're a blue-collar town. Got a lot of folks that own their own business, a lot of folks out there grinding. So self-employed buyers are a heavy set of the buyer pool in Pittsburgh. And if you're just looking at normal Fannie Mae, Freddie Mac mortgage guidelines, sometimes it's difficult to get those self-employed buyers into a home because of tax returns. So we're going to talk about that. The other type of loan is an investment-only loan. That's called a DSCR, and we're going to get into this first. The DSCR program is for investors only. Now, we all hear Pittsburgh is just about the most affordable city in the world. We've seen all the news articles. Pittsburgh is a very affordable city. That is bringing in a ton of investors. It could be out of the country investors. It could be out of state investors. A lot of investors are highlighting Pittsburgh is a hotbed to purchase investment properties. Now, everyone wants to be an investor. Everyone wants to own more than one home, but sometimes qualification can be hard, Tom, right? You got the down payment. You got everything. It's just you can't qualify because of maybe what's on paper. Now we got you covered.
Yeah, there's other options, and we could then look into how much the rent's going to qualify on that home. That is the basis of the DSCR loan, is making sure the rent from your tenant will be able to cover your mortgage. Now, you do have to qualify in other aspects. We are still writing up the mortgage and making sure that there's credit and you do have a down payment and there are other options.
You are so correct. Believe it or not, guys. I'm going to say this. We're not lying. The DSCR investment loan, there is no income or job history included in the qualification. It is all based off of the comparable rent schedule from the appraisal to make sure that that rent will cover the mortgage payment. If the comparable rent covers the mortgage payment and you have a credit score that's suitable, you can complete the investment purchase 20% down, but you don't have to worry about job history and qualifying income. That's what becomes huge. Yes, hey, Tom, Ryan, Anth, I got a buyer. They're perfect. They got 20, 30, whatever it may be, percent down. They're great buyers, but their accountant maybe did something on their tax returns. It doesn't make it look good on. What do we got going on? This is the perfect program. If you are looking to invest, but you don't have that perfect income or job history, call up West Penn. We got you covered now.
Yeah, that is the whole thing. We are done saying no.
Yes.
Give us a call. We're going to figure out a way to get you into a house or your client into a house. Give them any type of loan that we have in our plethora available to us to use, and we'll get it done. One thing I do want to note on this, Ryan, is this is not the same as a normal conventional loan. We are going to need a few days to get this pre-approval done. This is not a Saturday night, put the offer in type of loan. But most investors also do know that, and they're not running around chicken with their head cut off like a first-time home buyer. So that's one of the main things that I think is key to note on this product is it's not a 1 hour pre-approval for this.
Definitely
not. It may take a few days depending on how those people's tax returns look, as well as their bank statement. So if you have an investor interested in this, sometimes it could take a few days. The investor realizes that. We need the agent to realize as well.
Yep. I mean, again, non-QM. I just talked about it. It is a non-QM loan that makes it a little bit more unique. We're going to have to do things a little bit more on the back end, but we're not saying no, that we can't do loans anymore. And it's way better of an option than hard money. You have some of these investors out there getting hard money loans, and that's putting buyers at a huge risk. Where now, if we can get them into solid 30-year fixed mortgages, they're going to have a solid footing to continue their investing.
Yeah, I mean, hard money loans is exactly what it is. It's hard money. So, expect to pay a very high interest rate compared to the normal and excess fees because they are lending you based on a product that nobody else could have helped you with. So they're definitely going to benefit from that when it comes to what they're charging and their interest rate. And usually those hard money loans have to be paid back in 12 months. So if you need a little bit more time or you want more of a long-term strategy, one of these programs is definitely going to suit you better in that scenario for sure.
Yes. So if you are an investor yourself, if you strictly work with investors, if it's heavy your business, you need to sit down with us, do a pre-offer huddle, a pre-year huddle, so we can get you on the right path to close more loans. So that's strictly investment only. Switching to the other program we have, bank statement loans. All right. Self-employed buyers. They are very difficult to get qualified because of tax returns, because of what's on tax returns, how the expenses look, whatever it may be. There's sometimes income not there for us to use. Well, now we don't have to count on tax returns. We can push the tax returns to the side and use business and sometimes personal bank statements over a 12-month period to now qualify you for your mortgage. So self-employed buyers that have had issues, had pulling their hair out because they can't find a lender. They don't understand why they can't qualify for a loan. What did their accountant do to mess up their mortgage pre-approval? Well, now we have you covered for an easier approach.
Yeah. And I mean, again, we're not saying no this year, so give us a call. We're going to try to get these done for you. The bank statement loans, they may take a few days as well. So that's just the one caveat to this whole thing. But this is such a good product for those restaurant owners, for those grocery store owners, for those construction business owners. Those people have a lot of money tied up within equipment and other assets. This is the perfect loan for them. We're excited to work with those people again.
Yes, so excited. Again, these programs were around, like Anthony said, they just were offered to the wrong folks. Now the mortgage industry is way more honed in, understanding what programs should be offered to what type of buyers, whether it's self-employed or investors. And we're very excited to open this up in 2026. So we'll continue training everyone. But if you work with self-employed folks or you work with investors, the first call in 2026 is the West Penn Financial. That's all I have to say for today. Anyone have anything to finish us up?
Great job, Rye. Let's kick it off. Let's do this.
Go Stillers.
Go Steelers.
I like that. Go Stillers.
Later, boys.
Say yes.
Tom, Ryan, and Anthony. Oh,